So, starting in Canada, I think there's a chronic shortage, particularly of purpose built apartment units across the board in Canada, but especially in the major cities of Montreal, Toronto, and Vancouver. So, conditions are attractive for doing so. Land prices, unfortunately, are high, and there's a long permitting process, which in many jurisdictions is getting addressed. But there's a good opportunity for construction and for acquisition of units across Canada because there's no indication that demand is going to dry up anytime soon, and the affordability of owned units is moving away from the center of the incoming population. In the United States, I think that the gateway markets have been very, very expensive, so particularly Washington, D.C., Boston, New York, San Francisco, those entry-level markets are now stratospherically priced, and we're starting to see some softening of the rent levels there. I think that the purchase opportunities are better in the second tier of markets in the United States, where job growth has actually finally started to recover, and there's been a lag in terms of the new construction. On the development front, I'd pull away from the coast. There's some issues related to the change in climate conditions that make that a more challenging environment, and I would expect that the zoning regulations are going to adapt to reflect the increase in superstorms and other types of hazards in those areas. So I'd look at the central Midwestern markets. I think are a prime opportunity, and they have been lagged in terms of the recovery, but they're good, solid markets with solid job growth. So that's where I'd focus my attention.
I think the Canadian economy is still robust, and one of the areas I still feel is Toronto, primarily because of the population growth as well as the immigration flow and as well as the economy. The strength is really in the tech community and the tech industry that I feel that Toronto is still a fine place for acquisition and disposition. It may not be large-scale acquisitions or disposition, but I really think it's through assemblies and pockets of Toronto that are still undetected.
We're really a Toronto-focused, Toronto-centric developer, asset manager. I would say the fundamentals in Toronto have never been better. Structural vacancy remains really attractive at 100 basis points. We're still seeing very positive rent growth. The underlying fundamentals to rental is still very attractive, and we think on a risk-adjusted basis, our institutional capital partners very much want to stay in that space. We don't really play in other markets, other geographies, but Toronto, we really like the fundamentals, and we are happy to continue investing and operating in the market.
At Fiera Real Estate, we're primarily focused on markets in Canada. So we would look at opportunities for acquisition and development in growth markets, and then in markets without growth where we can get significant pricing discounts where the yields are better. But generally, I would say that there's, wherever there's growth, because real estate's housing people or the economy, that there's opportunities. So Toronto, Montreal, Vancouver would be key growth cities, obviously, in Canada. In the U.S., where there's good demographic growth, you'll have the same types of opportunities.